The Brussels Report podcast.
Welcome to a new episode of the Brussels Report podcast. My name is Peter Kleppe. I'm the editor-in-chief of Brussels Report, and I'm more than delighted to have as my guest Elena Leontjeva, and she is the president and the co-founder of the Lithuanian Free Market Institute, which is, I would say, one of the most successful free market think tanks in Europe. Also, a very important one in Lithuania. Elena has founded this back in 1990. She has also worked in policy as the economic advisor to the president and has been, closely involved in a number of important economic policies in Lithuania, including the creation of the currency board, which was of course very important to establish monetary stability in a new nation. So welcome, Elena.
Hello. Nice to hear you.
Very good. So you have also recently authored a piece for Brussels Report, and I found it quite interesting that you mentioned that hiking interest rates is indeed one way to combat inflation and the dreadful inflation that we're suffering from in the eurozone, and I think especially in the Baltics. But you mentioned that. And I found it really interesting is that actually basically reducing the money supply and the massive increase in money is even more important, and also the preferred way, because in this way it would be mostly the government sector bearing the brunt from the adjustment, whereas now it's actually a lot more the private sector. Do I summarize it well?
Right. I was writing about the need to have a consistent monetary policy, if we at all have some monetary policy, and
Mhm.
that rising the interest rates but not doing anything to restrict the money supply is inconsistent, and that the burden lies mainly on the private sector and households, but the government, which is the main benefactor of the bonds held by the ECB,
Mhm.
then they're not touched that much. And especially in those meetings, the ECB took a decision to start a new instrument called transmission mechanism, something. And
Yes.
the aim of that instrument was to push down interest rates paid by the southern states like Italy and Greece, the most indebted states of the Eurozone. So it was really inconsistent to raise interest rates for some people, some sectors, and at the same time to push down interest rates for some countries. As I understand, this mechanism already played its role, even although it was not introduced in reality yet. So some signals have been sent to the market, and the interest
Mm.
rates of those southern countries did not grow that much anymore.
True.
But what is important that today the ECB took a decision not only to increase the interest rates, but for the
Mhm.
first time they took a decision on restricting the money supply. Although this
Okay.
is a very modest step, and they promise to move very slowly. I think it is important because at least we see that both hands of the monetary policy now will be involved.
Yes, that's indeed a step forward. And actually linked to that, so what do you think is the main reason we're actually facing inflation at the moment? Is it all the energy problems, which are of course also largely politically created, and not only because of the war, but because of the reduction in fossil fuel production in Europe? Or is it monetary policy mainly in your view, or is it perhaps still because of the COVID lockdowns?
Yeah, of course, we hear a lot about COVID lockdowns, about the disruption of the supply chains, but sincerely, inflation started with the steps of the central banks, not only in Europe, but all around the globe.
Hmm.
And all central banks responded to the pandemic crisis by enormous issue of new money. ECB has increased the money supply by a quarter in 2 years, by 25%. In my own country, the money supply was increased even more, by 33%. So, of course, if we understand that we had a much bigger amount of money, and the same amount of goods, energy resources, and all other resources, and there were some interruptions in the supply of those goods, naturally the prices started to go up. And the money supply gave the space for those prices to go up. If there was no this increase of money supply, some prices would go up, some prices would go down. But since all prices went up, we can we can really see the relationship to the monetary
Yeah.
increase, and and of course the energy crisis followed. And again, if the money supply would not allow for the possibility to pay more for the energy resources, we would have some other dynamic on the market. Maybe it would be more stringent. Maybe there would
Hmm.
be many more challenges for some sectors. Maybe the money supply allows to go smoother through those challenges, but of course we cannot explain this inflation all around the globe with a 7% peak in US, 11% peak in UK, 10% on average in Eurozone, and in my own Lithuania, it's above 22%, in Estonia, even 25%. This is really
Oh, wow. Yeah.
the record inflation in Europe. And of course, without the increase of money supply, such inflation would be completely impossible.
And of course, some obviously I agree, and I always find it frustrating how how easy to understand it is, and how few people, especially those with financial education, seem to get it. But then, of course, their argument would be, well, we have had a lot of money printing and monetary expansion by central banks over the last 10 years. I mean, already before the financial crisis, this was, of course, caused by these policies. But the argument would be, look, why do we only see it now, this inflation breaking out? Why did we not see it in, I don't know, 2012 or something?
Yeah, we had a lot of discussions with my colleagues about whether the printing of money will induce inflation, and many people were appealing to the long experience of ECB policy, which did not really raise inflation. The money supply was truly growing from the very introduction of euro, but we did not see any inflation. Of course, prices go up with a certain lag, and certain shock probably was necessary for the market to manifest this enormous response. But already when pandemic started, and when the increase of money supply, these enormous programs of buying bonds by the ECB have been started, we have already warned that this will lead to inflation. And I remember one meeting with the authorities of Lithuanian Central Bank, when for the first time I said it will be double digit inflation. And at that time, it looked completely
Mm.
impossible.
Yeah.
But that is really what happened. And now we see it's not just double digit, we have over 20% of inflation. And for our people who were used to have sound and stable currency for 21 years,
Mm.
as you mentioned, we had the currency board arrangement, which was safeguarded by the Litas Credibility Law and which actually neutralized all monetary policy. And Litas was fully backed by the foreign exchange and gold reserves.
Mm.
So we were used to low inflation, sound money. So for people, of course, now it is a big shock, this unprecedented inflation.
Yes, of apart of course for I'm sure the very old generation, because I remember having read about the collapse of the ruble zone when basically all the Soviet republics were trying to rip each other off by printing a lot of money, and in the end everybody lost, right?
Yes, it was started not by the republics.
Hmm.
It started already by the system which was falling apart. And it's interesting that my native Lithuania, we were the first to have a very smart decision because at that time we did not have national currency yet. So we had to use rubles, but
Hmm.
rubles were deflating, inflating and devaluing very quickly. So we took a decision to issue a parallel currency, which at the beginning was used as a parallel to ruble. And the prices in Lithuania became free earlier than in other countries.
Okay.
So actually, we had a much higher rise of prices, but as a result, we could attract a lot of resources from the rest of the former Soviet Union. And also, Lithuanians were smart in selling those resources on the Western market.
Mm.
So that's how some of the first capital has been built in Lithuania by first Lithuanian capitalists. So we had, of course, a memory of those times. But at that time, we were not masters of our currency. So we just had to adjust to situation creatively, I would say.
Okay, interesting. Also, what I'm wondering is, you mentioned at the beginning how the policies of the ECB, to try to avoid shrinking the money supply, in effect, benefit highly indebted eurozone members like Italy. So I wonder how people, especially in the Baltics, that are, I think, notably poorer than Western Europeans, how they react when they see that Southern Europe does not always properly play by the rules. I mean, I'm from Belgium, and Belgium is more like Southern Europe. It's not exactly an example of sound, fiscal management. So how do people in countries that are, let's say, relatively responsible when it comes to fiscal policy, look at countries that are, basically ignoring the rules?
Of course, when some members of the club do ignore the rules, it it has a bad impact on the others. And Lithuania always was very strict with Maastricht criteria, and our debt is still below the margin because we started with a zero debt after the fall of the Soviet Empire.
Mm.
We have a debt now about 50% of GDP, but the deficit already is beyond Maastricht criteria. And of course, the relief of the Maastricht criteria at the start of the pandemic was probably a wrong action. I mean, it had a wrong impact on such countries which used to keep
Yes.
financial discipline. and now it is much more difficult to return to a sound discipline.
And like, let's say that the ECB does what is necessary, shrink the money supply, increase interest rates. Imagine if this, I mean, do you think this could sort of lead to breakup of the Eurozone? Because, I mean, if highly indebted countries like Belgium, like Italy, like Greece are no longer able to service their debt, they may ask for bailouts, and then Germany may do it to a degree, but then say, look, this is the most we can do politically. And in such a situation, I mean, perhaps countries may reintroduce their national currency so they can use the printing press to finance government, which is of course not intelligent. But do you think something like this is realistic?
That's an interesting scenario you describe. Of course, now everyone is interested in anti-inflationary policies. And we should admit that the inflation has been to a big part created at the central bank, and anti-inflationary policy is necessary, although we
Mhm.
see that the market itself already takes care, and we already saw the decrease of prices of many fundamental resources. So probably this could contribute to cutting down inflation even more than the action of the central bank. And of course, it is impossible to keep interest rates at a zero level forever. That was probably the first mistake of the central bank, which spoiled people because negative
Mhm.
interest rates are against human nature, something that is delayed for tomorrow cannot cost less than the things that you do not consume today. So the very logic which is behind economic processes has been abolished, or has there were attempts to abolish this logic. So the price that we are paying now is for the almost a decade of negative interest rates and easy access to capital, to money. We even see that deposits do not play the same role as they used to play, because
Mhm.
banks always have an easy supply of money from the central bank. So the whole financial system has been disturbed. So now, of course, action is necessary to recover the fundamentals of a sound monetary system.
Mhm.
And of course, increase of interest rates, although it is dangerous and it could freeze the economy in a moment when it is already freezing, when it is already at a point of a dangerous recession. This is not a good sign, but interest rates are still negative, let's say frankly. And even with the rise of interests, still those who have to repay the loans, still they are paying negative interest. Uh, Restriction of the monetary supply is necessary indeed. But as you forecast, this could lead to some countries not being able to serve their debt.
Mhm.
Maybe such impact is necessary. Maybe we cannot introduce financial discipline otherwise as by the signals which are sent by the market. Of course, I'm very sorry saying that the central bank can send market signals, but eventually those interest rates, when they rise, they're still kind of a market signals, which still could bring discipline to those countries which went beyond
Yes.
any sound criteria. If such countries as Germany and others will be too much impacted, and how they will behave, I think it's too early to say now. And from what we saw until now, of course, countries are still value solidarity above some of their utilitarian benefits. So, so I think it's too early to predict that anti-inflationary policy will lead to break
Okay.
of eurozone. But that's an interesting scenario that you describe. I mean, we should really have all those scenarios in mind, and take care uh, before it's too late.
Okay, and then let's maybe move to Lithuania itself. I mean, how is the economic situation? Of course, there's the war going on in nearby in Ukraine, and then this economic blackmail by China. So how is the economy doing in the Baltics and specifically in Lithuania? And is any free market reform still taking place?
Yeah, it's really a miracle that despite all the challenges and the geopolitical situation in the region, Lithuanian economy is still growing. And it's the only growing economy now in the Baltic states,
Hmm.
since our neighbors, Estonians, have a recession for already half a year. Latvians had one quarter of a fall of the economy, and we are still performing on a plus side, and we have 2.5% of annual growth in those first 3 quarters of the year, which is indeed not a bad result with the war and crisis of energy prices and so on. What you ask about the free market reforms, of course, it's very difficult for the government to move ahead with the free market reforms, like we are still lacking some steps in taxation. We are still the only country in the Baltic states which did not go to the taxation of profit deferred to the moment when dividends are paid off to the shareholders. It's interesting that this reform has been born in Lithuania at the end in mid 90s. The Lithuanian Free Market Institute, and Lithuania was the first country which started to reform its profit tax. We had zero rate on all reinvested profit from 1997
Okay.
till 2002, and then in 2000 Estonians introduced the full reform of a profit tax deferred to dividends.
Hmm.
Latvians did the same in 2018, and Lithuania has this reform in the plans, but still, because of the war and geopolitical situation, it was not introduced. But deregulatory measures are taken by the government, and we were successful in liberalizing our labor market and our labor migration legislation, since there is a huge shortage of labor in almost all European countries, probably except for the southern countries again. And Lithuanian economy and society in general was suffering from the lack of labor. We were able to promote the idea of deregulating migration legislation, and the laws have been approved, and all procedures for migrants from the third countries, non-EU members, have been shortened by 1 month, and significant removal of significant barriers have been achieved. And just
Hmm.
yesterday, we had a discussion at the parliament about how to move further. So the change of mentality is very visible, and people understand that we need to be more open. We need to invite talents and labor in general to our country,
Okay.
and that for the healthy economy, we need labor, we need
Yes.
hands. And here I may connect it to our discussion on the monetary policy, since
Hmm.
the central bank has been successful in promoting, inducing demand, but for the supplies of goods, you always need labor, and labor takes time in time, takes part in time. All processes take part in time, and that's why today we have this enormous shortage of labor
Yes, yes.
all over the globe. Just, money can be printed easily, but you cannot print people.
That's true. Same in Western Europe. Many problems with that. Maybe to conclude, are Lithuanians happy with EU membership, or is there some discontent about certain things that you think, oh, this is something um, people in Brussels, policymakers should listen to?
I think in general, Lithuanians are very supportive to the EU membership, and it was very important for our economic and cultural and all other relationship. Of course, there are certain problems with the redistributionary policy of the EU. We worry about the ideas to discuss universal basic income next year, despite all the challenges
Mm.
of the war and certain trends to redistribute and to let people live without any merit. But of course, uh, we are members of Eurozone, and the current inflation, of course, raises some concerns for Lithuanians. But in general, of course, also membership in the Eurozone was instrumental for our business growth, for our exports, which are still growing. So I think in general, we are still quite positive.
Okay, well, good to hear that, and thank you very much for this discussion. And I look forward to many more pieces on Brussels report from your hand and from the Lithuanian Free Market Institute.
Thank you very much. Good luck and have sound money.
Yes, thank you.
The Brussels Report podcast.